Hey everybody. So hello. We are in the group. We are in the group. You guys keep asking me for things that you need. And so my name is Linda Murray Bullock. They call me the business plug. And I come to talk to you guys about funding. Like you keep saying, oh, we don't have access to funds. Oh, I can't find where the funds are. So I have brought on my new friend at the Tennessee Valley Federal Credit Union. He's going to talk about some programs they have for entrepreneurs. So come on in, everybody. If you catch this on replay, go ahead and put hashtag replay. This is a special edition of the Business Plugs Mixer that I pulled together just to answer your questions about funding. So, welcome, Marcus. If you will introduce yourself to our guest.
Yes, thank you, Linda, for having me on the business plug. I love that. I love that. My name is Marcus Johnson. I am a small business lender with Tennessee Valley Federal Credit Union. I've been with the credit union about a year and a half now, and I've been in the financial services industry for 12 years. So I know enough to be dangerous.
Oh yeah, I say that about IT. I know just
Exactly.
to mess up some stuff. But yeah, the reason I asked you to come on is because there are about 400 people in this group. They're all small business owners or would be small business owners.
Okay.
So some of them have been in business for a while and others are new to the game. And so one of the things that I hear recurrently is that they can't find funding. They can't
Mm.
find funding. And so what I try to do is when they tell me what their needs are, I try to make sure I bring people who can respond to those needs and give them some strategies and some options. But before we start talking about all those fabulous programs they have at the credit union, let's talk about some basics about being credit worthy.
Mhm.
What does that look like?
Yeah, so a lot of things go into credit worthiness. Obviously, the very first thing that typically pops up in everyone's head is your credit score.
Yeah.
And so that is obviously incredibly important is to make sure that you have a good credit score, but to also understand what the credit score requirements of whatever institution you plan on borrowing from, what their minimum thresholds are. A lot of people will apply for credit, whether it's business credit or personal credit, and have no idea what the minimum credit score is. And I often advise that because one, it could save you an unnecessary denial, which is an unnecessary inquiry on your credit, right? If you know that in order to apply for a business loan, you need a 660 credit score, and you know that your credit score is a 635, well, you got a little bit of work to do, right? And so rather than putting in that application and 9 times out of 10 getting declined, now that you have the information on the front end, you could save yourself some time and work to get that score up. So it's not just having a good score, but it's also understanding what the minimum credit scoring criteria are for the institution that you plan on borrowing from as well. But credit score is just one part of it, right? In small business lending, it's very different from consumer lending, right? If you're going to get a car or a mortgage, it's pretty straightforward, right? Your credit score is this. You're trying to buy a house. You make this much money. Approved or denied. It's very straightforward, very black and white. Well, business lending, it's more art than science, and a lot of times, my supervisor he'll like to say the answer is it depends, right?
It
And
depends.
and um, and that's very true because you can have an 800 credit score, but have a horrible business plan, and you won't get approved.
Mm,
Right? Or you can have an 800 credit score, have a horrible business plan, but you're willing to put up cash money to secure it, and you might get approved.
mm,
If the credit score is the first part of it, but the next part is what I would think is just understanding what your personal liquidity position is, right? So essentially, what that means is what cash assets do you have, or what assets can you liquidate fairly quickly to bring something to the transaction. So we've established that you should have a decent credit score. But then the next step is what are you bringing to the table, right? Do you have a piece of property that you're going to pledge for collateral? Do you have some cash that you can pledge for collateral? Do you have some other asset that you're willing to bring to the table in order to help you achieve and access the type of funding that you're trying to get access to? And then the next part of that is your business plan. So you got a good credit score, you have some collateral, but now what do you do? What is it that you're trying to sell? What is your product, your service? What is it that differentiates you, that's going to make someone take a lending risk on you and make them believe that you're going to be able to pay them back? And so, those are, I think, the three main things. I mean, there's a lot more to it, but in general, having a good credit score, understanding what your personal balance sheet looks like and what you're willing to bring to the table, and then what is your business plan, and what is your plan to be able to take on debt and repay it?
Absolutely. And so I love that you included that asking what the minimum credit score is, because that's a lot of times the question that doesn't get asked because people don't
Yes.
know to ask it.
Yeah,
They
absolutely. Absolutely. And for me, your credit is hard to build up and easy to tear down.
mm,
Right. I mean, it can take, years to really build a strong credit score, but all it takes is a couple of delinquent payments, and that score drops very quickly. And so you have to be very, in my opinion, very guarded about your credit score. And one of the ways you do that is by, before you enter into any, turn your application into to anyone, particularly if it's a local lender, and you can have someone to call, is just to understand, hey, what does my credit score need to be? And then the other thing that goes along with that is you need to also know what your credit score is. And in these days and times, I mean, it's very easy to access some variation of your credit score. I mean, I can't think of a credit card at this point that isn't offering a FICO score, or a Vantage score, or some sort of score. You got Credit Karma, you got, even the three agencies are offering subscription services. So there are so many different ways to get a general idea of your score. Now, I will also say, put along with that, the score that you will typically see on your credit card statement, or through Credit Karma or something like that, isn't always the score that you may see at the bank. So I will preface that and say that, it just should give you a general idea. So
yeah,
my rule of thumb is, whatever your credit score says on Credit Karma, you may want to add 30 points to it and take 30 points away from it. And
yeah.
somewhere in that spectrum is more than likely where you will fall when I pull your credit report. So for instance, if Credit Karma says you have a 700 credit score, then when I pull it, I might see a 730, or I might see a 670.
Okay.
Now, there's many reasons why that is. I won't, bore you with all of that, but just to be on the safe side and to make sure that you're setting reasonable expectations for what to expect, I would always just add 30 points north and south of whatever score you see.
That's good. That's good. And so, because a lot of times the new business owners that I have, they have some, they may not have perfect. That's one of the things they say is, Linda, I don't have a perfect credit score. Do you need a perfect credit score? And I know that for small businesses, sometimes there's non-traditional loans that go. And how does that work? Like with the non-traditional?
Yeah, so there are many different funding options out there. Crowdfunding has really become a big wave here recently. So that's always a good platform for entrepreneurs to access credit. You got Cabbage, that was, I think, recently acquired by American Express. You
Yeah.
have Kiva, that our local collab and some of our other institutions partner up with and use. So yeah, there are certainly other alternative options to access credit if you don't have the best score, or whatever the case may be. Specifically for the credit union, though, we have what's called our Ideal Leap loan program.
Yeah.
And that program is geared specifically to early stage and startup businesses. So in traditional small business lending, you walk in, you decide, you want to open up a bakery, and you bake all these cakes for church or for your sports team, and everyone just says, "Oh, your cakes are so great. You should start to sell them." Right? That's normally how these things start. And so you wake up one day, you say, hey, you know what? I want to open up a bakery, and you do a little research, and you realize it's going to cost you, $40,000 in startup costs. And so you walk on down to the bank and you say, hey, bank, I want $40,000 to start my bakery. Chances are the bank is going to say, well, no, right? And that's primarily because typically, banks want 2 years of financial statements.
Mm,
They're not necessarily in the startup financing business. It's not a bad thing, right? That's just not the space that they typically operate in. And so what we have done at the credit union is we started Idea Leap. And so the way that business works is you want to open up the bakery. You're convinced that your cakes are going to be the best thing in Chattanooga. What you would do is you would go to one of our what we call collaborators. We work with 8 of them. Launch, Collab, the Urban League, Score, Bright Bridge, TSBDC, Causeway, and then the TSBDC in Cleveland. Those are the organizations that we partner with. So you would
mhm.
pick one of those organizations, you would go down to them and say, hey, I want to start a bakery and start slinging these cakes all around Chattanooga. And then what they're tasked with doing is helping you to prepare your a full-fledged business plan,
Mhm.
marketing analysis, SWOT analysis, expense and revenue projections, the whole 9 yards. Because hey, we already have a lot of bakeries in Chattanooga, right? And so one of the things that they really we expect them to do at the credit union through the Ideally Loan Program is really to challenge the entrepreneur on their thinking. What's going to make your bakery different from Cupcake Kitchen or B
Mhm.
Sweets or any other bakery in Chattanooga? So once pass the what I like to think of as the intellectual hazing process, um, if the collaborator that you chose to work with, because that's the entrepreneur has a choice to choose whichever collaborator they want to work with. But if that collaborator believes that your bakery is the next best thing and you really have a shot at being successful, then they will help you complete your Idea Leap loan application, and they will send over your application along with a letter of recommendation and your full business plan to the credit union. And then once we get it, we underwrite it, read through the business plan, try to understand what the business model is, what makes this bakery so special, why do we need to get behind, why do we need to get behind one, and then we try to make a lending decision. Now, a referral from the collaborator does not by default mean that you're going to be guaranteed funding. All that means is that the collaborator that you chose believes that you can be successful and they think that we should consider you for financing. So I want to make that clear.
Mhm.
But once we evaluate it, we'll look at the request. And if you're asking for 35,000 to start your bakery, sometimes we'll say, hey, you know what? That looks good. We'll finance the 35,000. Sometimes we'll make a counter offer and we'll say, hey, well, looks good, but we best we can do is 20. And then sometimes, like any request, we have to decline them. But that's the space that the Idea Leap Loan Program works in, right? It's to help those who have an idea but may not be able to get access to the type of capital they need to get it off the ground. And the Idea Leap Loan Program, we do loans as small as 2,500 all the way up to $50,000, depending upon the transaction and what it is that the borrower is looking for.
Mm. And so if someone doesn't have the best credit right now, like how long does it generally take? Depending on, I know it all depends on where you are. So I
Yeah.
get the whole it depends.
Hmm.
So, but if someone is at 600
Hmm.
or 625 or six something,
Hmm.
and they want to get it to a 660 or they want to get it to a 700,
Hmm.
like ideally do you all provide that counseling that can help them, give them avenues to consider working toward getting their credit rating improved?
Yeah, that's a good question. So the credit union doesn't, I guess, offer counseling in an official manner.
Okay.
But what I believe that most of our lenders try to do, and certainly me, and I would say this stands true for all of our lenders, is whenever we make a decision to not fund something, we really try to help the borrower understand the why behind it.
Right.
We've all have been subject to the sorry, thank you for your credit request, but unfortunately
Yeah. Yeah.
we've all gotten that letter at some point, right? And the thing about those letters though is they're very vague, which they need to be for privacy purposes. But 9 times out of 10, there isn't someone that you can call to say, hey, what could I have done differently, right? What can I do to get a yes next time?
Right.
And there are, I'm sure, many different reasons for that. But the point is that on the business side, 9 times out of 10, we really try to explain to the borrower why we couldn't do it, whether it was the type of collateral that they were wanting to use, we couldn't take, or if it was sometimes it's an appraisal issue, depending on what it is. Maybe the appraisal didn't come back well. If it's a credit issue, we can say, hey, look, you have these particular things on your credit report that dropped your score. So, from a business lending standpoint, we really try not to just leave people hanging.
Right.
Now that's not to say that it's a two-way street, right? So the borrower has to want to have that conversation,
Absolutely.
and
Absolutely.
sometimes in the midst of maybe being frustrated or disappointed, they don't want to have that conversation.
Yeah.
But my advice would always be, I'm glad you brought that up, is that if you're trying to start a business and you can't get the financing that you're requesting, always ask that question. Well, what is it that prevented me from getting it? Because I think, again, it's not always a good business relationship with a good banker is not always about getting what you want. Sometimes it's about being told what you need to know,
Yeah.
right?
Yeah.
And I think sometimes these financial transactions can be looked at as a one-way street. I come to you, I tell you what you want, what I want, you give it to me. Well, it's not fast food, you
Yeah.
know. Um,
Yeah.
and
You
and
can't have it your way.
yeah, no, you can't. At least not all the time. And so
Yeah.
I think that it's always good. Even none of us like to be told no. If you're asking for money, you're asking for a reason, and we all have been through that. But I think it's a good practice to try and understand, why you can't get it, and then act on the advice, because sometimes it is, hey, you were 60 days late on 2 credit cards, and so we need to show you need to show that you can be consistently on time. It could be medical collections. I see that a lot, where people have medical bills and don't know about it. It could be a debt to income ratio issue. I mean, that happens very often, where people just already have too much debt, and sometimes you have to pay down debt, which
Mhm.
sounds easy. But if you have $10,000 of credit card debt and you don't have $10,000 laying around, it may take you a couple of years to pay that off. So I mean, I guess that's the long answer to your question of it. It really does depend on the situation,
No,
but
that gives options. Yeah, yeah,
yeah,
that gives options because what happens is a lot of times they'll say, the first thing they say is, "Well, Miss Linda, my credit not where it needs to be," and so I know we have Project Hope here,
mm-hmm,
Brandy King,
yep,
who at First Horizon, they just changed
mm,
their name, the First
yep,
Horizon Bank, which does provide counseling.
they do.
So my first thing would be to offer them to make an appointment with Brandy King to get their ducks in order.
Yep.
One of the questions someone asked in the chat is, does the credit union require the 2 years of financial statements?
For the not for the Idea Leap loan program. Now we do the credit union does traditional lending. So if you're coming to us and you just insist on wanting bypassing Idea Leap, and you just some folks just sounds good, great, yeah, but I need the money now. Can you just go ahead and do it? Okay, great, and they get the answer they get.
Mm,
So yes, we do we do require 2 years of financial statements, sometimes three, depending upon the size of the transaction and what it is that we're doing. So we're not different in that regard. It's
mhm.
just that we have a loan program for folks who are again in that early stage or startup businesses. Once you get past the 2 and 3 year mark, and you have 2 and 3 years worth of financials, then you should be willing to supply those financials, if
Absolutely,
you if
absolutely.
you've been in business.
And this is so would they need so if they're a startup, should they already have business licensing?
Yeah, absolutely. So we check with the Secretary of State. If you are an LLC or an S corp or any other organized entity, we go to the Secretary of State's website, make sure that you're registered, that you are up to date on your annual report. Any local business licenses that are required, we do check for that. We have to get a copy of your organizational documents. I mean, that's one of the things that we do on the front end, right when you're becoming a member. So if you have, Linda Bullard LLC, well, we got to get those articles of organization, right?
Yeah, yeah.
So yeah, we do. It's paperwork, involved in making sure that we understand who we're doing business with, who the related parties are, and
Hmm.
who is ultimately going to be held accountable if, we need to collect.
Exactly. Yeah, because this is a business, right? I
Yeah,
mean,
absolutely,
in
absolutely.
the business of financing. So people looking for funding, I mean, in the general sense, need to be upon their own financial health, like need to really understand
Absolutely.
the numbers, their own numbers. Yeah.
Yeah, absolutely. I can't emphasize the importance of bringing something to the table, especially specifically for us in Idea Leap, because we absolutely want to help entrepreneurs and early stage businesses access the financing that they need. But the purpose of the program is not for the credit union to take 100% of the risk. So going back to the bakery example, if it takes you, if you need 35,000 to open up a bakery, and you've already invested five of your own money, and you can show that you've invested 5,000 or 2,000 or whatever the number is, just something that you can show. Hey, I bought ingredients, I bought an oven, I bought this. Then you have skin in the game. Now if you
Right.
need 35,000 to open up your bakery, and you haven't put your own dime into it, well, that's us taking 100% of the risk, and that's not the game that we're trying to play.
Right.
And so it is always important to understand your own balance sheet, understand what your costs are going to be, and then work towards bringing something to the table, because you can always negotiate better deals for yourself when you're not coming just hat in hand, you know,
Right.
asking for
Right.
something, but you're bringing something to the table.
Right. They need to be invested in the idea that they want everybody else to invest in. So
Absolutely. And
yeah,
just leaving and just quitting your job is not enough,
yeah,
because we
yeah.
we get that sometimes. Literally, I've had that happen to me two times that I can think of, where the person said, well, hey, I left my job. And that's not always the most comforting thing as a
No,
lender, because then the next
no.
question is, well, how are you going to pay me back if you left your job and you haven't generated the first sale? And so, it's leaving your job certainly is probably part of the process for many entrepreneurs, but it doesn't necessarily always demonstrate skin in the game. It just means you made a decision to free up time, but freeing up time and actually having money invested is not does not always equate to the same thing.
Right. Yeah, that's not apples to apples there.
Yeah.
And so the first, so that is the thing is, and this is what I always say is nobody's investing in anyone's dream that they're not willing to invest in. And so a lot of times entrepreneurs have great ideas or ideas they think are great. I'm a business coach, so I never heard a bad idea. They all may need a little tweaking or something, but they're not never a bad idea. But then even in that, they have to show skin in the game. They have
Mhm.
to show where they are working toward making oh, we flipped there. I don't know what happened.
Okay.
We're having a
I
storm.
figured you would come right back. That's why I wasn't
Yeah,
worried
we're
at
having a
all.
storm, and so it interfered just a little bit. But yeah, but people. So if they're on this, business owners, take heed. Hope you've taken notes. Hope you have your notes written down. And so, where can they go on the internet to find out about all the different things the credit union offers?
Yes. So our website, www.t as in Tennessee, V as in Valley, F as in Federal, C as in Credit, U as in Union.com, www.tvfcu.com. You can go to our Facebook page as well. That's Tennessee Valley Federal Credit Union. And you can follow us on Instagram at TVFCU. And all of those places, but particularly our website, obviously, is going to be, where you'll find a lot of information about what the credit union is doing for both small businesses and consumers.
And I love that. So when you're talking about a business plan, and I want that, this is still financial. When you're talking about a business plan, the three financial statements, projections that they need to have is they need to have their cash flow, their balance sheet, and their profit and loss statement or income statement. Are those
Hmm.
still accept?
Yeah, absolutely. We don't accept business plans that don't have those, and particularly your statement of cash flows and your projected income statement. Definitely need to have those. And the cool thing about the Idea Leap loan program is it does allow us to use those projections in our underwriting process. And I think
Mm,
that's one of the things that makes Idea Leap unique. And I'll kind of get into that right now. So not only is Idea Leap an avenue for early stage and startup businesses to potentially access funding through the credit union, but we do some non-traditional things from a lending perspective. And again, one is that we're able to use projections, and we couple those projections with if your business, let's just say your business has already been in business for a year, and you need some additional funding. Well, we can take your year's worth of real revenue, and
mm-hmm,
then we can match that with the projections you come up with, provided
mm-hmm.
that they're reasonable,
Right, right.
and try to help to underwrite it to the projections that you have. The other thing is that there is no minimum credit score for the Idea Leap loan program. A
Mm,
lot of folks go, huh? When I say that, but there is no minimum credit score. What we try to understand for folks who have low credit scores, we really try to understand the why behind it, because there's always a why. Sometimes the why is folks just don't pay their bills, right?
yeah,
Or
yeah,
sometimes the why is someone, you got sick, right? Some
yeah.
some major life event happened, and you got laid off of your job, and you got behind on your bills, and but you overcame whatever the circumstances were, and now you're gainfully employed, and your credit score is recovering.
Mm,
Sometimes you may have co-signed on something, and
mm,
and you forgot, and now that you've been reminded, you can go and rectify it again. Sometimes it's medical bills. So we really try to understand the why behind the low credit score, and if
mm,
it's reasonable, if it's something that makes sense, then we still try to see if we can work with the borrower. Now that doesn't mean that we make the 530 loans, right? But the 600s, the
yeah.
615s, the 625s, it's not automatically dead in the water. We just have to understand why, make sure it makes sense. But then the business plan certainly has to be that much stronger.
Mm,
The personal finances have to be that much more stronger. So there has to be mitigating factors, right?
right.
If you have a 625 credit score and you're asking for $10,000 and you have $900 to put to it, and you have a job and you're making $35,000 a year, you see what I'm saying? Like there's just a lot
Yeah, right,
that
right. It
goes
shows.
into it.
Right. It has to show the effort that you're willing to make yourself,
Exactly.
because nobody's funding dreams, right? I wish they were.
Yeah,
Got a
man.
lot of dreams I need funded. And that's the thing. So when I'm talking to, like when I complete business plans. In fact, sometimes this TB Small Business Development Center sends me clients. And one of the things that I run into with business owners is they have elevated, escalated the numbers, the projections, thinking that,
Hmm.
I need to show I can make $1 million my first year. And when I have to ring them back in and say, yeah, but that's not,
Yeah.
You know,
Yeah.
they're thinking if I can show I can make $1 million, they'll give me this 50,000.
Yeah.
But
Yeah. Yeah.
it's not realistic.
Yeah, no, it's not. And you hit the nail on the head, man. I call it the Tesla effect, right? Like everybody is Elon Musk, and they're gonna within a year, gonna go from zero to a billion, right?
Yeah, yeah. The
Um,
million is the number. That's the benchmark. That's
yeah,
it.
and so we have ways internally to control for that. So we understand that we're going to get some very ambitious numbers and business plans, and that's part of it. So it's our responsibility at the credit union to make sure that when we're making a lending decision to a startup, that we're making that decision based on reasonable projections, and
Yeah,
even if I have to make some adjustments, which is often the case, because I mean the reality of it is doing this kind of lending is there's a lot of risk involved.
absolutely.
But we're taking that risk because we understand that that's how small businesses get started. Someone has to be willing to step out there and say, hey, I'm going to give you an opportunity.
Yeah,
But in that, we have ways to make sure that our underwriting is reasonable, so that if we do make a decision, it's based on just some numbers that are realistic. And
yeah,
and the other thing that I'll also point out about the business plan is that I often see people when they're doing their market analysis, they'll talk about the national data. Well, nationally, this market
yeah,
is going to do this nationally, and all that's great. But what does it look like at the local level? I don't really see a whole lot of that, and that's what really speaks to us when we are underwriting these transactions, is how much does the entrepreneur understand about the local market. If you're going to get into a
absolutely.
bakery and you can't tell me how many bakeries are in the market, that's not a good thing.
Right.
Or if you tell me that there's 10 bakeries in the market and all those bakeries generate $100,000 and you're going to be number 11 and you're going to generate a half a million, that's a problem as well.
Yeah, yeah,
Uh,
and that's right. And I teach a class on Saturday mornings of Black business owners. I have 11 of them, and that's what we just talked about this past Saturday is about the industry, like knowing your industry, because most business owners just want to sell something. Like I
yeah,
just want to sell something,
yeah,
and there's more to it than that. And if you're going to be sustainable, you need to understand that there's more to it than that. That it isn't a whole industry, and then
hmm
how will you play, what's your role in that industry, and what part of the market share are you trying to go after, like even
yep,
knowing that there's a market share for you to go after, but just understanding those things that don't get talked about when people
hmm
start businesses, which is why 50 to 90% of them close within 3 to 5 years, is because
hmm
they don't know the industry and they haven't done the research. And you mentioned the Small Business Development Center. I send my clients, all students are required to go there.
hmm
Like I even
yeah.
have a checklist and the first thing it says is, contact the SBA and get coaching and get your help that you need, because those are free assets that business owners don't use enough.
You're absolutely right, and that I'm glad you mentioned that, because that's another thing about our Ideally Loan program. Is part of that is that you are required, whatever collaborator you choose, and I always advise our members to maybe reach out to at least two and kind of get a feel for how they do things. But whatever collaborator you choose, you are required to check in with that collaborator at least once a year. We believe firmly that really helps the success and the longevity of the business, and that rule has been put in place since the inception of the program by Tommy Nix, who runs our department, and that's really to really help the business owner. And so
Yeah,
that, and that's in the loan documents as well. So you're signing when we close these loans that you understand to meet with a collaborator, because, like you said, these are great resources that are available. They're free, and they're very necessary for anyone who is not just trying to start a business but wants to stay in business, right?
Right. That's
Because
the
that's
thing.
the
The
hard
start
part.
part. Yeah, the starting is easy. It's $30 here. 15 to the county, 15 to the city, and you're
Right.
in.
Yep.
but
Yep.
but
Yep.
sustainability and not putting all your resources in a business that won't last.
Yes.
That
Yes.
is, I taught for Launch Chattanooga for 6 years. I was the
Okay.
downtown facilitator, so I know exactly what that's like. And
Yep.
that's why I've started doing what I do now, is because I want to go deeper and get people who don't have access doing the programs that are already in place, but that I can become an add-on to what's
Mm-hmm.
already going on. And so,
Mm-hmm.
but I thank you. I cannot thank you enough. We have taken 35 minutes of your time, but I really thank you for dropping these nuggets in my group.
Yeah.
This is a building your own six-figure business group. And so,
Okay. Okay.
so
Well,
these are the people that said they raised their hand and said they want to do some work. So we're trying
well,
to make sure they know what work needs to be done in
bankers
order to
love
help them.
six-figure businesses, but profitable six-figure businesses is
Yeah,
just
that
as
that's exactly.
important.
Exactly.
Top line is interesting. You'll have some business owners who generate a lot of top line revenue, and then they can't manage all the way to the bottom, and so it's
Mm,
like, yeah, I brought in $700,000 in sales, and then once you get all the way down to it, the net income is negative 2,000,
mm,
and so six figures is great, but you want to make sure that six figure is at the bottom, not the top,
yeah, yeah.
because
Absolutely.
it will make your journey that much easier. And then the final thing I'll say is, this coronavirus pandemic has certainly hit our community very hard,
Mm,
both on the personal health side, obviously, but also on the small business side. There are a number of projections out there. None of them are overly positive, but I saw
mm,
some that's suggesting that we could lose about 40% of
yeah.
our Black-owned businesses when this thing is all said and done. And so I would encourage any business owner, when you're developing your financial plan, developing your business plan, the one thing that I don't see is a line item for savings.
Mm,
Right? Savings always seems to be this thing that you'll just get to when you start selling stuff. My opinion is that just like you have a line item for your rent, for your electricity, for this, for that, my opinion is that there should be a line item for a percentage of savings, whether
absolutely.
it's 5% of sales, 1% of sales, whatever the number is. And the reason why I say that is if you put that down on paper on your business plan, I believe that there's going to be a higher probability of you sticking to that. This is a once in a lifetime pandemic, right? So you could argue that there no one had enough money to weather what we've gone through over the last 4 months, or what small business owners have gone through over the last 4 months, and I understand that, but I also know and understand that even outside of this pandemic, small business owners, but particularly the ones in our community, struggle to save.
Yes.
And so part of my background was in wealth management. When I was at First Horizon, I was in their private banking area. And so just over the years, being in the banking world and having the opportunity to work with people on all spectrums of life, saving to me kind of separates those who can kind of ride things out, obviously, and those who can't. And it seems like sometimes a lot of us in our community really struggle with that for a number of different reasons. So, the point that I'm making is that really try to be intentional
Yes.
about your savings. If your first month you generate $1,000, put back 50. I mean, the amount doesn't matter as much as the consistency,
Mm.
right? Because if you
I,
put
I
back
like that.
50 out of
I,
a
I was
thousand.
I was reading this book, Profit First,
Mm-hmm.
and it talks about having, multiple accounts to
Yep.
make sure that you have taxes paid, right? So there's a
Mm-hmm.
tax account, and then there's a profit account, and you decide what those percentages. Well, the tax account will be about 10 or 15%, but then
Mm-hmm.
you also have the profit account, and that's 1 to 5%, 1 to 10%, whatever that is. But it's intentionally
Yep.
setting up these different accounts so that you have one operating account, and then each time you get money in the money is dispensed to the other accounts. So that
Yep.
way it takes the brain work out of it, right?
Yep.
You have the accounts already preset. So just understanding how important, and it's called Profit First by Michael. He goes by Michael M because he has long Mikovich or some name like
Okay.
that.
Okay.
But it's a great book, and it has I think he had like 8 accounts altogether for the different
Mm-hmm.
things. But it's a way of thinking about, you were talking about the bottom line, right? You know, six
Mm-hmm.
feet at the top, and then you get at the bottom, you get minus. Talking about how to keep that bottom line strong
Yep.
is, use automation and use things that take the thought process out of it. So you don't have to remember, oh, I need to take $10 and put it over here. Or I need to take $50. If you can set up sub accounts that will handle that for you, then automate
Mm-hmm.
that process by all means to make it
Yeah.
easy.
Yeah, absolutely. You want to make it easy as possible on yourself. But yeah, please. I mean, saving is paramount because you can sell cakes and pies and clothes until the cows come home. But if you're not putting anything back, what is it for? And a
Yeah.
lot of entrepreneurs like to get in business because they want to work for themselves, and that is
Yeah.
that is admirable.
Yeah.
And there's nothing wrong with that. But you can still absolutely be a slave to the job that you created.
Absolutely.
Uh,
You just create another job.
exactly.
Yeah.
And
Yeah.
so I think whether you're working for someone else or whether you're working for yourself, having a solid savings plan so that you can walk away from either whenever you're ready is always something that should be at the top of mind.
Yeah. I agree. Well, thank you, thank you, thank you. I mean,
Thank you, Linda.
you've given us so many nuggets and so many things to work on and to think about and to consider when we're talking about, becoming credit worthy, right?
Yes,
Getting
yes,
financially healthy. Like we,
yes.
we take care of our body, but we need to take care of our finances as well.
Make dollars make sense. I mean, that's just what it
That's
is.
it. That's
That's
it. I
what it
love it.
is.
I love it.
Just a sec.
Thank you
I love
for
it.
bringing me on, Linda. I really, really appreciate the opportunity. And yeah, look forward to doing these again in the future.
Absolutely. Well, we appreciate it. And so if we can be of any assistance, then by all means, then please give us a call and we'll definitely be there and do what we can.
I absolutely will, Linda. I hope you have a great weekend.
Okay, if you'll hold on for a minute,
Yeah.
I'm going to close this out. So my name is Linda Murray Bullock. They call me the business plug. I just plugged you into the Tennessee Federal Credit Union, Tennessee Valley Federal Credit Union. Go to their website. It's
FCU. Yes.
tvfcu.com.
Yes. .com.
So go there and get your information there and reach out and tell Marcus how he did. If he gave you some information that can help you out, then you already have. I plugged you into Marcus Johnson. You guys have a great weekend and we'll talk to you soon.
Take care.